Welcome. This is Tio with the Arcane Bear. Today we are doing another portion of our trading series, crypto courses if you will. We're going to be looking at the Fibonacci sequence, the retracement, and the extensions of that. So let's start, shall we? We're going to look at what it is from a more intrinsic level to begin with. This is a Fibonacci movement placed on top of a sunflower, right? Beautiful, beautiful piece of nature expressing itself. And what are we looking at, and why is it important in investing to notice nature? Nature moves fundamentally in fractals and mathematics on many different levels. So when trading, it's useful to incorporate those values. So what does the Fibonacci sequence look like without the beautiful plant? Well, there it is. Now, what is this? It's a sequence of numbers where you have 1, and then 1 is 2. 2 plus 1 is then 3. 3 plus 2 is then 5. 5 plus 3 is 8. Right? 8 plus 5, 13, and so on. So what you get is this nice spiral. You get hard lines if you were to do it, but we can imagine that it bends. Nature bends and curves things. It's not all hard logic and reason. Right? There is emotion involved in this as well. So you have nice curvatures of these very fractal ideas. So how do we apply something from nature that's entirely mathematic but bends to emotion and logic? Investopedia, let's see what it says, because I think they've always done a great write-up, so I'm just going to reiterate to them and give them a shout out for helping me share this information. Basically, the Fibonacci retracement is created by taking two extreme points, usually your main peak through to your stock market, or in this time your crypto coins or your altcoins, your tokens, your digital assets, whatever you'd like to call them. And we're drawn between them, and to see that we have the dividing distance between the key Fibonacci ratios of 23%, 38%, 50, 61, and 100%. Once these levels are then identified, horizontal lines are drawn across to this identifying possible support and resistance levels. Now, this Fibonacci sequence follows as before, as we said, 0, 1, 1, 2, 3, 5, 8, 13, and consecutively, experientially, expressing itself from the number that it was before plus the new number. Very simple. Right? This continues infinitely on forever. It is a fact where the numerical sequence of phi, the approximation of 1.618, the times greater than the preceding number. This is the common relationship between every number in the series and the foundation of the common ratios used in retracement values. So the Fibonacci ratio of 61% is also referred to as the golden ratio, or the golden mean. It is found by dividing the number 1 in a series by the number that follows it. For example, 8 divided by 3 equals 0.6153, and 55 divided by 89 equals 6.6179. The 38.2% ratio is now found by dividing one number in the series to the number that are found in two places to the right. For example, 54 divided by 154 equals 0.3819. So, what do these reasons and these ratios have to do with anything in the stock market? Right, let's go to our trading area where we were looking at NEO together the other day. For those of you that are subscribers, let's show you how we do this. We're going to remove this Fibonacci retracement and extension level that we already have here, and let's look at our one-day chart. Okay. Now, on our one-day chart, we have this beautiful, massive extension, right? And where do we want to run the Fibonacci to? Well, originally we were running it from the top of our candle here. The wick, generally speaking, if you're just doing rough stuff, if you want a quick general trend, it just can be close. Run it all the way down to the bottom support, and what do we see? We see these nice big runs through here, back down to here, and we touch these levels almost with keys, like bam, and bam, and once you broke through, boom. We wanted to try to thrust all the way up to the top of this 2618 extension. So why, again, is mathematics, and for lack of a better term, why is nature important while viewing the stock market? Even though there are lots of bots trading, these bots, which are computers and humans, are looking at the same key fundamentals. So let's do an extension again on the last high that we had. We're going to grab our Fibonacci retracement tool. We're going to drag it from the candlestick all the way down to this lower level of support. Now what do we see? We see that there's likely values that we're going to be communicating, or that are going to be communicating to us rather, not that we're going to be communicating them, but they'll be speaking to us in some way, shape, or form. Intuition is helpful. This is partially guesswork because, again, this is based off the emotions as well. It's not hard to find mathematics. If it were, everyone would be a successful trader, but we see obviously that is not the case. So, can you remove your emotion, trade logically, and express and experience these reference points as you're going? So see, we hit the top once, boom. We hit it again, boom. We came down here, our candlestick touched that 618, that golden mean ratio, and we boom, touched it again, and boom, touched it again. So now where do we go? Well, we were talking about Elliott waves yesterday. So if this was the first Elliott wave on the impulse pattern, which means moving upwards, we're going to grab our Elliott wave impulse, and we're going to go 1, 2, 3. So 4, the fourth extension. 618, possibly. 0.05, possibly. 0.382. What you can do is you can create ways that you can buy back in by using this to your advantage. So if we sold up in this area like we had suggested was a good idea, you can now aim buys for the 618, the 5, and possibly the 382 retracement. And you can also then identify that we may possibly move, if we're lucky, all the way to the 618 or the 1618 extension. Now again, none of this is perfect. This is guesswork. You're going to have to play around and draw because the word impulse itself implies the emotion connected to the people that are trading these things, and the bots included, because they're looking at the same fundamentals as the humans. Even though they trade with no emotion, they're trading off these exact same charts. So often people have come to the conclusion that the Fibonacci retracement and extension levels are like a self-fulfilling prophecy. So I hope this all made sense to you. This is Tiho with the Arcane Bear, talking Bitcoin, crypto, business, philosophy. We've sometimes gone out and shown people plants. We've got 10,000 liters of water storage here. We live in the middle of the jungle, and we are enjoying this part of life because it is decentralized in its nature. And in nature, things are very often decentralized. So we are appreciating the fundamentals of what we see here, and we're sharing and expressing them. Now, if you also enjoy those things, like, share, subscribe, hit the little bell. That way when we go live, you can watch us. If you don't want to do any of that, dislike, unsubscribe, don't share. It doesn't matter. There's a wealth of information found in mathematics and emotion. And if you can use your eyes and you can use your ears to listen and to hear and to see and to understand and to observe, you can become more successful. Because I have failed many times, many times, and I will fail many more times. But as long as my averages keep me above my failure, say let's say out of 100%, I fail 40% of the time. Well, I'm still successful 60% of the time. So every time I stack, boom, I'm gonna end up ahead of the game because I'm not failing at a rate that's unacceptable. If you're failing all the time, that's insanity, and you should probably try doing something else. This, if you follow your logic and you get your emotions in check and you use them to curve and balance and dance with these ideas, you can be successful, but get ready to fail. There's no schooling that will not cost you money. If you want to learn how to trade, if you want to learn how to invest in fundamentals and technicals, it is going to cost you money one way or another. So stagger yourself in and out of trades. It's the safest, conservative way to go. Don't just sell everything you have right here and then buy in with everything you have right here. Then you're stuck in that trade until it moves the way you want. Look, sell here, sell here, sell here, sell here, and then nice, buy back here, buy back here, buy back here, buy back here. Make your averages come through. So thank you very much for joining us again. I already told you what to do or what not to do, so we've got that covered. We'll see you guys on the other side. This has been Fibonacci retracements and extensions, or extensions and retracements. That doesn't really matter. Some of y'all on the other side of the world, it's going the same way for you, right? Have yourselves a great day. This is Teal with the Arcane Bear. Oh, one last thing actually. www.arcanebear.com. Go to our website and sign up for our newsletter. We're going to be launching an educational portal soon, and if you sign up, you will get first access to that area where we're going to have a forum, live chats, reminders of me going live. We're going to do certain nights where we trade live with people, so if you want to make the same trades as we're doing them, we're going to share that with you. And it's all free. We want to share the wealth of knowledge and inspiration that we have come across in this vein of harmony in the life that we live. And this is our karmic debt and our gratitude for the consciousness that we've been given, right? So enjoy yourselves, everyone. Thank you very much. Have a great day.